Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I've got Scott with me today from Sow and Reap Capital. He's got some crazy, insane information to show us with some chart comparisons. At least I think it's crazy insane. I'm going to start calling him the chart pattern recognition king. That's what his name's going to be. So we're going to call him Hail to the King Scott of the chart patterns. I'll kick this off. I'm going to give some background information first. I'm going to kick off kind of what the overall pattern looks like for a smart money, institutional money, public buying, and then a blow off top and what that all looks like. I'll kick it off with some very basic information backing the commodity bull market in terms of demographics. And then Scott's going to roll in here and absolutely put the jaw to the floor for chart pattern recognition to some of the other commodities that have taken off and show you how similar these patterns are. And that's, remember, people behave in herds and the herds leave these patterns behind. So what's valuable isn't necessarily, what's valuable and what we try to gather from the charts is one, the pattern that the herd is creating, and two, how big this pattern can be. That's the fractal of it. So we look at it from a couple of different perspectives. It helps us with timing. It helps us with how big the move can be. It helps us with our own psychological sanity. So when everyone's telling you this bull market's done, it's over with, it's totally over, I'm like, all right, I'm going to start panic buying now. Because if everyone's panic selling, I got to be panic buying. I just do the opposite. And that is not investment advice by any means. We're not here to do investment advice. We're here to educate and show you guys kind of what we do and what we look at and gain confidence in our holdings where we buy when everyone else is selling. And that's how you make money. You make money by getting the good purchase, the good purchases, the good buys. You buy it when everyone is telling you that you're not supposed to be buying it. So I'll start this off. Let's kick it into gear here. I'm going to start sharing my screen. So first I'm going to go over what this is. Okay, I'm going to get that off. This is the valuation. This is your time frame. You've got a couple of different phases. There's 4 phases: stealth phase, awareness phase, mania phase, and blow off phase. And I always talk about the valley of despair. That's what I'm referring to when in the valley of despair, when you get those double bottoms. That's what that valley of despair is, if you want to know. I see it all the time in all these different charts, and everyone they think that this return to mean is just going to crash back into the valley of despair. Sometimes it does, but when we go through this, you usually have a slow takeoff stealth phase, and it's in this phase for years. It's not 1 year; it could be 3 or 4 years. This could be 3 or 4 years, and then this could also be 3 or 4 years, and then a blow off top could happen for a couple of years. That's kind of what it is. Sometimes they're compressed, sometimes they're drawn out. So this cycle usually is as long as the cycle it takes in the real estate market. That's what I've found. Maybe some people can disagree, and that's fine. And then this recession phase is the length of the recovery phase of real estate. That's what I've found. I am proposing that we are still in this general vicinity in here. I don't think we're up here in the public phase, especially not after this sell-off. This is the bear trap, perhaps, maybe. It's easy to see when you're past it, very difficult to see when you're in it. Now, another thing that you want to look at is this cycle is apparent across different areas and sectors at different phases. So right now, I think that we are in this phase, on the awareness phase for commodities. I think that we are on this side, which is the bull trap in some of the overall stocks in the stock market, like the NASDAQ and perhaps the S&P 500 and stuff like that. So not everything's in the same exact location. And sometimes certain sectors will drag down other sectors, even though they're in the different part of the cycle. And sometimes they overlap, where the first sell-off bear trap overlaps with this sell-off over here as well. I'm just kind of stating that. Now, looking at the annual percent change in the US population, this is the demographic that I wanted to share, give you guys a little bit of history on what I think causes these boom bust cycles. The boom cycles are the demographic and the rate of change changing over time. Now, someone's going to say, what does this have to do with the commodity boom of the 1970s bull market? Well, it's a great rate of change of the demographic. And this demographic, if you were to add 30 years to it, that is the first time home buying area. So about a 30-year-old entering, and it was younger the further you go back in time, and it's a little bit older today. So this is the big boom in that demographic. Notice that in that demographic, there was a pullback in the population, and we had a pullback similarly in the 1970s. Between 1970 and 1980, that's your pullback. Your pullback was the demographic coming back down. We had a relentless move in interest rates from 1970, add 30 years to it, from 1970 till mid 1970s, we had the pullback. And then the late 70s, this large demographic push was that last push in the interest rates. If you look at the 2000s bull market, you've got this nice big rate of change over here, which was a spike in demographics. And it just so happened to align with commodities and some other stuff. Add 30 years, 35 years to this, you go from the year 2000 to the year 2005, 2006, 2007, 2008, depending if it's 30 or 35 years in the first time home buying age. Then we look into what is coming up today. We have a large demographic shift higher in the percent range for the millennials coming in. This is 1990. 1990 plus 30 years is 2020. And what do we go to? 2020. And this is roughly 1995-ish. So you add 30 years to 35 years, depending on the demographic, you get 2025 to 2030 as a possible peak. That's where I get my 2027, 2028 that I kept quoting. And it aligns very well with the real estate cycle being 18 years in length. This will probably be 12 and 12, so 24. But so we've got that. We still have the housing units. It's still going into an expansionary phase. Everything is aligned for the inflation to come into the system by the demographic. And this is our latest data released April 26th. We have 1.87 million permits. Now, this could slow down because of interest rates. It could slow down because of a whole bunch of different things. We still have the demographic coming in larger quantities, pushing this stuff higher. Now, that's the fundamental background of this, just to get you caught up with that. Now, if I were to let Scott take it from here and show you some of the charts that he's got made, this is where I started kind of dropping my jaw a little bit, because the similarity between, you know, some of these other commodities and what's happening to uranium is pretty jaw dropping. So Scott, please show us what you got.
Do I go with the best chart first?
Yeah, let's do it. Just nail it with them. Just nail it.
Right, so here it is. So what you've got here is some people have questioned, you know, are we still alive in the Livermore's bullish cylinder, or have we broken down? Well, my answer is no, we're well within the bullish cylinder. And here's a chart that I've got here. So this is Bannerman on top, and this is natural gas down at the bottom. And look at how similar they look in pattern. So basically you've got the start of the Livermore's bullish cylinder right here, and then you've got gas which leads. And then uranium catches up. This is the star. This is the star here. And then you've got natural gas coming down. You consolidate for a long time. And you've got Bannerman, which consolidates for a long time as well. Really worth noting here. And what makes me really comfortable that we're in a bull run is we've got a massive run up here, like a very strong run up. And then we've got consolidation sideways. Consolidation sideways. And we only come down at a very very low momentum coming down. We've got very low momentum coming down. And then what you've got here in natural gas is you do a massive run up again. Uranium, note that uranium consolidates while natural gas is running up really hard up to these levels. But what you'll notice in Bannerman is that it plays a massive catch up to natural gas, like it did here, right? And then you've got this consolidation again in natural gas and uranium. And then natural gas does a dump, right? Uranium's still consolidating, Bannerman's still consolidating, and then it follows natural gas and does a little dump here. And then natural gas runs up to this level, the I pattern here, runs up, uranium runs up like it did, but then natural gas does a final dump. This is where I think it's a gift area. So I'm drawing a little gift here. But this is where we're sitting at now in this Livermore's bullish cylinder for Bannerman and a lot of uranium stocks right now. So I feel like this is a gift area. And what happens to natural gas after that? It breaks out of the Livermore's bullish cylinder. And what I'm expecting to see is a continuation up in natural gas following a log chart. So typically what happens is, this is just another view of natural gas, just this run up here, using log chart like this. And so typically what happens once it breaks out of Livermore's bullish cylinder is that it will go up in nice parallel channel within a log chart. So this is the log chart, right? I mean, we had a pretty big drop yesterday, but this is the log chart that I'm talking about. And then what I mean by this is that if you look at CCJ's chart back in the 2000s, you've had this going on. So this is actually, okay, I'll just turn the log chart off. As you can see, this is when we had the rounding bottom and started going parabolic. But once you turn that into log chart, it becomes a very clean parallel channel like this. So I'm expecting, I mean, if you look at this chart, there are a couple of like huge red days, right? Huge red wicks, but it stayed within the channel. So my base case for natural gas going forward is that we'll be traveling along this log chart, as I just showed you. Oops. And if you look at other charts within uranium, yeah, I mean, this is the bullish cylinder for Peninsula Energy, for example. I don't have this stock, but you're still well within this Livermore's bullish cylinder. And this is probably the last final gift area that I've just been talking about. So it looks really good.
Yeah, no, did you hear it?
No, I didn't hear anything.
Oh, I was yelling back there. Yeah, so where do you think that, so I was trying to compare the bear trap. Do you think we're in the bear trap right now? Because
yeah, we could
right
be.
where it falls down like that, is that considered the bear trap perhaps?
It could be, or it could, I think there's a possibility that it dropped down a little bit further and truly make it a bear trap. And by that, what I mean is, if I go back to some of the classic charts back in the 2000s, so say, for example, Rio Tinto back in 2000s, and if I just go back to, I'll just show you the Rio Tinto chart. So if you look at this, what we had was a Livermore's bullish cylinder, but you had more cycles. It wasn't just 1, 2, 3, 4, 5, 6, 7, and then lift off. It was actually, you know, you could start there and go 1, 2, 3, 4, 5, 6, 7, 8, 9. And then what you had was a fake out below as well, like a wick below, right? We keep talking about, Andy and I keep talking about the wick below. And this we saw the wick below. This is where loose hand, like the paper hands, absolutely get smashed because they panic sell. And you put in a slightly lower low here as well. So if you draw the line here, we always look for higher lows and higher highs. But if you look at this, it's gone slightly below the last low here, right? So a lot of people must have panic sold here, but look at what happens after that. It just goes boom, see you later.
That's the that's called the slingshot pattern, the slingshot cheetah pattern. So in order to get a slingshot cheetah pattern, you have to lighten the load and consolidate the shares with finding value and Scott.
Yeah. So I see this across so many different uranium charts. And what's really surprising to me across many uranium charts right now is we're sitting right at support for a lot of them.
They all look ridiculous to me.
This is PTU. This is PTU. I'll just put it on the daily time frame.
You have to have courage here.
Like, look at this. Like, it hit it here, right on the dot. Hit it here, hit it here, hit it here, hit it here. And now we're sitting right at support for this one. You can see that we're doing exactly the same on URNM. we are right at support. So if you draw this line here, you've hit it here, you didn't quite get here, but you're sitting right at support for uranium, right?
Yeah, it could also, depending on how you draw that, you can draw it multiple ways. You
Yep.
could have a slight pullback below it if you
Yes.
contact your third arrow. And this could be
Yes.
the
bear trap.
piercing movement
piercing,
below, where
yes.
everyone says it's time to sell, it's game over, I don't want to buy,
Yes.
uranium's done for. And then I come in with the I don't know, I don't get scared, I just buy stuff, and then I
Yep.
stick with the thesis, because that's the thesis in the beginning that I described to everybody. And I just
Yep.
keep buying. I don't know, I don't have the risk, my risk profile, I guess, is missing from me, because I just stick with the thesis and go.
Yep.
So.
Yep. That's right. That's right. So, I mean, I think everything's looking quite intact. So did I just go through pure point uranium? I did.
Yeah.
But even if you look at like mega uranium, for example, which I don't have. Like mega uranium, for example, is sitting right at support to the dot, to the T. Like, look at that.
And
like it's sitting right at support.
if we drop down tomorrow or today,
Yep.
I'll release
Yep.
it for tomorrow. For today, would that scare you out of there at all? If we drop
No,
below?
it wouldn't. So
And why?
so the thing is, I think we can get a week. So the only thing that will concern me really is if we go down below these trend lines on a weekly time frame or a monthly time frame, and we stay there for a couple of weeks or a couple of months. Sorry, I've got like my kid hitting me right now, but that's when it will scare me. So yeah, no, not at all, not at all. This is the week that I'm talking about. This is the wick that I'm talking about. So you can get a slight wick like this, which will be mega bullish. And this will be called the slingshot pattern, as you call it, Andy. But yeah, you can get a slight wick like this.
You can talk to her. It's fine. I can edit this.
No, that's all
Not a
good.
big deal.
That's all good.
Yeah, so I think we could drop below a week and I'd still be buying. I don't know. I'm a buyer. I'm just maybe crazy. Try to get the cheapest shares possible, but some people get scared out, obviously.
Yeah, and we talked about this a couple of weeks ago, I think. What we did say was that this is obviously a clear line here, but what we might see is like a week below here, right? So you could have like 1 month. 1 month doesn't do it for me, right? So you could have 1 month coming down, but then you could have another month strong up that completely negates the current downtrend. So that's what we mean by wick. So you can see lots of wicks like around all this support area right here. So, you know, wick above, wick above, wick above, like that was a massive wick above. So you can get all these wicks going across, like wick down here. So this is what we talk about when we say wick, because we care about the close, right? More than we care about, you know, what happens throughout the month. So yeah, and this looks really good, I think.
We're
There's
getting
nothing
close
wrong with this chart. Yeah, we're getting really close. So you can draw this trend line in many different ways, but even if you draw it like this, we're getting really close to that. Like you can draw this multiple ways, but if you draw a trend line going across like this, yeah, we're getting really close to that support.
And it's also not
And
like
for
a
me-
line. You can think of it as a little zone too, or something like a
Yep.
support resistant zone. Because when
Yep.
on longer time frames, they may not bounce to the point. It'll just kind of
Yep.
get in the general vicinity of it.
Yeah.
So
And this could be the better line actually. So you've had a bunch of like support going across here, and then this is a fake out to the downside, and you come up. This is a slingshot move, right? Because you've faked out to the downside. And then yeah, you've complied all the way across. So like I think we're really close. And what's more interesting to me is that this coincides. We need the stock markets to stop coming down, right? So that's one thing we probably need in the near term for these uranium stocks to bounce. But what I've been posting here, and this goes back to April 23rd, right? I think we've got about 2 to 3% left in IWM, so Russell 2000, for example. And this is based on what I've put up here. Hold on, sorry. Let me just get my kid out. Hold on. Sorry. Gemma,
That's
can
a
you
big
please
deal.
go out and close the door, please? All right. Sorry. So this is the Russell 2000, and what I did say here before is that Russell 2000 seems to have like these lines going across that really it sticks to. So various charts show me various, I guess, potential bounce area. So if I look at Russell 2000s, the reason why I said, so if you look at this chart, this is the start of rate hike, and we've had about a 25, 27% fall here if you do a measured move. And what I did say was it could probably come down to this area because of this support zone. And the reason why I said that was if you look at IWM, various charts stick with various, I guess, the key support areas. And with IWM, for example, what it really likes doing is it likes looking at these lines going right across, like something like this. It seems to get close to it or bounce near it, right? So you've got this strong support going across. It seemed to bounce off it. It happened again around here. So if I just take this off the chart, so you've had this strong line going across. Obviously, this was a COVID hit, but you've had this strong line going across and you bounced off here. What I'm saying here is you've got these strong levels across here, and it's likely to fall down to these areas, which is what I said around IWM back in 23rd, right? So this is what I've kind of said. This is probably the downside for IWM. And I think we are, and this is the post that I made just yesterday, is we've probably got another 2 to 3% downside before it starts bouncing off that level again. If I go to NASDAQ, for example, this is another chart, another thing that I've kind of posted. When did I post this? 30th of April. And I said, I think this is a knee jerk, and how far can the NASDAQ go down to? And I think I posted this something like this earlier as well. But what I did see was as we had rate hike, we kind of fell down to the 200s and weekly moving averages. So we did it here back in 2004. We had a slight wick below, but we nevertheless, you know, that was a pretty good area to be buying. And same with 2015 rate hike, when they first started raising hike, this was the knee-jerk reaction. So it came down to around the 200 weekly moving averages. And so what I did say in my tweet was it's likely to come down to 200 weekly moving average as the downside. And where we are at right now is we are here. So we've only got a little bit more to go. And so if you look at the COVID crash, for example, we've come down to around that area, 200 weekly moving average. So I expect there to be some type of bounce around this area. I'm not, you know, definitely calling this a bottom, because I think obviously the tech stocks are, you know, very much overvalued right now. So I don't know where the bottom is, but I think this is a likely area that we see a bounce, which coincides with all the uranium stocks, which is very close to or at support right now. So yeah, I think this is probably the time to start accumulating, scaling in maybe. Obviously not financial advice. You've got to decide for yourself what you want to do with your money. But yeah, I feel like these are pretty good levels.
And you know me, I panic buy when everyone's panic selling. So I get so excited that I panic buy into stuff, and I'm just like, and I just throw money in it, and because everyone's all whatever. And I don't know. I just keep going back to the demographic. I keep going back to the turning of the ratio of the CRB index to S&P 500. If you look at the uranium ratios, actually, I can show that real quick. We can do that real quick here. The uranium ratios look absolutely awesome. And the uranium futures prices, really, they haven't really done much, you know, to, they haven't pulled back or anything, but look at uranium to silver.
That looks really good.
That looks absolutely insane. Are you kidding me? And I'm just hitting the tops of these guys, and that thing looks ready to go. I mean, it looks ready to go. We got the uranium to S&P 500. Tell me you don't like that. I mean, look at this. That's a clear break, guys. Crazy. It's looking great from a monthly perspective, monthly candlestick perspective.
Yes.
This is the uranium to gold price.
Yeah.
We've got two little resistance areas. We're sandwiched between it, but once we break that, I mean, this is a party like it's 1999, right? Okay, maybe
Yep.
2004, hopefully, but that good old Prince. Crude oil, it's been basically a battle there, but this is the uranium to copper ratio, and I just kind of threw that out there. And obviously, you could even come by the closing prices, like somewhere in that range. But that also looks like it's trying to put a bottom in. You could also draw a line across, something like this, and we haven't gotten there yet. But we're making headway against every other commodity there is.
Yeah.
So this is when you want to look at the commodity that's going to outperform all other commodities in a commodity bull market, which is going to outperform stocks and bonds and other assets. So I don't know. Uranium looks pretty good to me. Will we have more downside in the short term? It's definitely possible, but at least the information that we know, and that's how we're viewing it. Is we're viewing it like it's potentially in progress of a natural gas type movement that you saw earlier. So
and uranium natural gas didn't really have that strong correlation the last cycle, but I think the reason why we might have it this cycle is because of the ESG stuff going on. Like it's the same type of money flowing into the same sectors, right? So yeah, the kind of like that ESG money is kind of flowing into. I mean, we don't have the huge funds coming in yet, but the ESG conscious energy investors are looking to uranium and natural gas, which is why I think we're seeing that type of similar movements in both sectors.
What sparked you to look at the natural gas to uranium charts?
I just looked at it
because
I just looked at natural gas and I was like, this looks really similar to some of the charts that I've been looking at.
I asked Justin Hune about it. I asked him if uranium was going to follow what natural gas is kind of doing, because if natural gas takes off, I think uranium will take off next. I said that during the interview with him. And
I think I missed that part.
yeah. And I was like, you come over here with this chart, and I'm like, man, that's insane.
Crazy.
Because I was looking at the charts and I thought they looked. I didn't see the total similarity, but I just saw natural gas spike. I'm like, well, what if uranium does that next? Because it competes with natural gas. But all right, that's awesome. I really appreciate you sharing that, Scott. And
no, thanks.
I'm sure all the viewers appreciate that as well. As I think that's a cool correlation. That's all. And I think it's probably going to play out.
Similar, right? It looks so crazy.
It's crazy.
It just looks so similar.
It's just time lagged over a little bit. So
Yep.
All right. Is there anything else you want to share, Scott?
Yeah, just Bible verse before we go. And I think I mentioned this before, but this is my favorite verse in the Bible, so I might as well mention it again. So it's John 3:16. For God so loved the world that he gave his only son, so that whoever believes in him shall not perish, but have eternal life. And I mean, I think this is where I find my true peace, knowing that I've got eternal life in Jesus Christ. So just wanted to share this. Because the thing that I think about all the time is, well, I'm not really afraid of death because I believe in eternal life in Jesus Christ, right? So like nothing that happens to me on earth is going to be bad enough to ruin my day. And that's why I'm like just happy. Like I don't really care what the markets do. I know obviously the uranium thesis, obviously I've got strong conviction, which helps, but at the end of the day, even if it doesn't work out, I think it's going to work out. I very strongly believe that it's going to work out, but even if it doesn't work out, I know I've got eternal life in Jesus Christ. So wanted to share that.
All right. Awesome. Thank you for sharing that. So if you made it this far in the clip, good for you. Give us a thumb up. Subscribe to both of the channels if you like this content. Check out my Finding Value website underneath. Platinum membership gets you all the information. I'm actually going to release this, I think, early to the Platinum members, since we're doing this right now. I'll probably do it tonight instead of the day after or something like that. But way to go, Scott. I really appreciate you sharing this. This is awesome information. I like seeing positive correlations, positive information when everything is down and negative, and to give at least me even gave me a little bit more confidence. It's like, oh heck yes, because I don't know, I'm stupid enough to buy into some of this stuff. I cost averaged in a little bit. I just buy into the face of this weakness. I go really slow. I draw it out, and I don't know. I just do that, and I don't really have the fear that other people have. And I have the fear for others on the channel is what fears me.
Yeah.
It's not even buying it for myself. It's the fear of others and their perceptions of kind of what we're doing, because I know that they understand, they look at what's right in front of them in terms of the prices moving up and down, and then they make their decisions, and their behaviors and emotions are guiding what they're doing. Instead of me, I'm just like loading up when everyone else is panicking. So I don't know. That's what I do.
Yeah, that's kind of what I feel, because now I've got more followers since I've started coming on your channel, and like I feel like, I don't know, like it's hard for me to tweet stuff now, because obviously we talked about the potential downside, given like hints here and there that we could see potentially downside to certain levels within certain stocks, whatever. But I feel like maybe that would cause panic, like among some of the investors. Like I don't know what to do. Like obviously, I think my main thing is to kind of just get out there what I'm doing, which is just holding, right? Sitting tight and looking for these accumulation zones so that I can add more to my positions, which is what I'm doing. Like I'm not really trying to trade any of this, because one day it's just going to break out and just keep going, right? That's what we're in it for, right? So I think it's getting harder for me as well. Like I don't know, like I feel bad for, when I see people like panicking on Twitter, because it's natural to be like that when you're first starting to invest in stuff, right? Because you follow the price and you look at the price movements. You don't really know what to look for in charts, which is why it's so easy to panic, and which is why I think you need mentor like Andy to guide you through this. To be honest, like I mean, if you're struggling with this stuff, I think someone who can provide that expertise will just massively help you. So yeah.
Yeah, I get it from the fundamentals. That's where I just look at the demographic and I say, hey, look, this is what's happened last time. It's happened multiple times, and it pulled back with the demographic every single time. So the way that I look at this and the way that I get my confidence is I look at the demographic, I look over to the right and say, okay, whatever they do, they can only kill the demand. They can kill the demand for a short period of time, but they can't stop this demand from coming. It will just be persistent for the next 5 to 8 years. It's just going to be coming and coming and coming. And they're like, what are they going to do? Try to price people out of houses? I just don't think that's possible. For the entire time, it's not possible. They can slow it down, but they can't stop the movement. I don't think. And if they try to slow it down too much, they'll destroy themselves with their tax revenues and all this other stuff. So they're painted into a corner anyway. So I'm like, okay, go paint yourself into a corner, and I'll just keep looking at this. And then there's also the other part of me that says, if I don't take full advantage of this and I miss this opportunity, I will literally, like, that is far, far worse than me selling, missing the opportunity like that. I'll take a 50% haircut and then ride it up 20x.
Same with me.
Then I would sitting on the sideline saying, oh, well, I'll buy it when it bottoms. I'm like, good luck with that. Like I'm buying. I'm going to try to cost average in. Some of my purchases will be poor purchases, perhaps. Others will be fantastic. So, I mean, they'll basically average out to probably a very good outcome. That's my guess.
And that's really when I think Mark, the interview with Mark was really good, because he really highlighted why I'm sitting through all this. Because when I asked him the question, what are you going to do if it just starts running? At what point do you FOMO back in? And he said never. Like he's not going to chase it. So like for me, I mean, yes, there is a good chance, like looking at the charts, that there was a good chance that we're going to have a pretty significant pullback, but charts aren't, they don't mean the accuracy of the chart reading, right, isn't 100%. At best, they're probably like 70% or whatever. So it increases your probability. It probably gives you better entry a lot of the times, but, they're not 100%, right? So, I'm not trading these stuff, because if it ran against the odds and if it just started running, at what point do I FOMO back in? The answer is it's going to be super difficult for me to chase this movement. So when Mark said he's willing to forego the entire bull run if it does start moving against him, that was like, yes, this is why I'm holding through this, because I'm not going to make that mistake that I made back in 2000s. Because the potential downside, let's say potential downside from here is like 50%, but then the potential upside is like 30 times, right? 3,000%. Am I going to lose my position? Am I going to lose a potential 3,000% for a 50% haircut? The answer is no. I'm holding through. And so
a 50% haircut requires 100% gain to get back to level.
Yes.
And I know a lot of people always look at that. They're like, well, I'm not going to take a 50% loss for 100% gain. We're not looking at 100% upside here. We're looking at this large asymmetric bet, which could go blowing to the upside. Now, the strategy that I have looking at this is, and I didn't buy at the top. I've been accumulating at these low points, and some of the points, the price right now is like right where I was accumulating before, or slightly below it in some of them. So if I were to look at this, and let's say I'm just going to make up numbers here, okay? I put $2,000 at $3, right? So I've got, or $2,000 at $2. Let's make the math super easy. So I put $2,000 at $2. I have 1,000 shares. It drops 50% to $1. Now I have to ask myself, do I double down? And the answer, in my opinion, is yes, I am going to, not financial advice. So I double down at 1. I have 2,000 shares plus 1,000 shares is 3,000 shares at a cost average of like $1.50. All right. And that's what I've got, is I have $1.50, and this thing just rips it, goes to $10 or $20. The best thing that I can think of is, rather than FOMOing out, is just to cost average in and try to get as many cheap shares or as many shares as possible. But that's my strategy. It doesn't have to be your strategy. I'm a little bit risk crazy, where I stick all of my, I put all my focus on the fundamentals and the big long-term technical picture chart. I don't focus on the short term. I'm just trying to buy as best I can entry points. Sometimes I mess it up. I mean, we don't know the future. Sometimes you don't catch that absolute bottom. Sometimes you buy and you FOMO in a little bit. I do the same thing. I FOMO in every once in a while. So what? Everyone does it. Everyone does it. You're like, oh no, it's going to jump this time. And then you FOMO in like right after a support break, and then it comes crashing back. You're like, oh gosh, you kidding me? I do that every once in a while. But I don't know what's going to determine your returns is buying when everyone else is telling you not to buy, or when they're scared. That's really what it comes down to. And I'm not telling you guys to go out there and just buy everything, but in order to make outsized gains, you have to buy when everyone's telling you, or telling you you're crazy, or they're scared. So unfortunately, that's just the way the markets work. And these emotional outbreaks by people are what is giving you the opportunity to get it cheap. So that's all I'm going to say. That's all I've got left. Anything else, Scott?
No, I agree with that. Agree with it totally.
All right, guys. We'll catch you next time. Thank you for viewing, and yeah, we'll see you next time. Bye.
See you later.